Now that we have already discussed the elements of financial statements, okay, and we have also discussed the uh, financial statements, including the complete set of financial statement, we're now going to focus on the main, okay, first two main financial statements that should be prepared by an entity, starting from profit or loss statement. Then later the other one, the statement of financial position. So again, profit or loss statement as a component of your statement of comprehensive income, it recognizes the income and expenses, okay, related to a specific accounting period. So starting with the profit or loss statement, okay, definition and purpose, okay. Um, let's start first with the statement of comprehensive income. A comprehensive income is a report that provides information about the financial performance of an entity, showing both the net income or net loss in relation to its ordinary activities or continuing operations, and other comprehensive income or loss from other activities that results, okay, the results of which are not reported in profit or loss statement. Therefore, the component of our statement of comprehensive income encompasses both the income and net income and net loss, okay, reported in your profit or loss statement, and the other comprehensive income or loss reported in other comprehensive income statement. Okay, the method of presentation of our statement of comprehensive income, it could either be separate statement or single statement. When we say single statement, we start first with the profit or loss statement, showing the net income or loss for the current period, then followed by the comprehensive income statement. Okay, wherein we start with the net income or loss for the accounting period, then down with the other comprehensive income items. Okay, then single statement, when we say single statement, regardless of the item, if related to uh, profit or loss or other comprehensive income statement, should be prepared in a one statement manner or single statement manner. Okay, so it is up to the entity on how we're going to present the financials. How are they going to present the statement of comprehensive income? Okay, but I prepare no, but I prefer separate statements. Okay. Other comprehensive income statement. Okay. Uh, definition and purpose. It is a statement or report as a major part or component of statement of comprehensive income that provides information about the financial performance of an entity, showing the other comprehensive income or loss from other activities that the results of which are not reported in profit or loss statement, meaning all the items that are not applicable to be presented in profit or loss statement are being presented in statement about other comprehensive income statement. Okay, the components that are being presented in other comprehensive income statement, we have at least two. Okay, the items that can be reclassified subsequently to profit or loss statement, and those that are not being reclassified subsequently to profit or loss statement. Okay, so for items that are recyclable, we have it gains or losses from translating financial statements in of a foreign operation, and unrealized gains or losses on derivative contracts designated as cash flow hedge, and unrealized gains or losses on debt investment measured at FVTOCI. Okay? Then for items that are not recyclable, we have it unrealized gains or losses on equity investments measured at FVTOCI. Okay? Then change in revaluation surplus, okay, or the revaluation surplus itself, or the surplus that relates to revaluation of assets, remeasurement of defined benefit plan. Okay, we have the remeasurement gains or losses. Okay, so last we have gains or losses attributable to credit risk of a financial liability designated as FVTPL, or fair value through profit or loss. Okay, so moving on with the profit or loss statement or statement of profit or loss, the main highlight of this discussion, we have it a statement or a report as a major part or component of statement of comprehensive income, showing the net income or loss of an entity in relation to its ordinary activities or continuing operations. Okay, so for the components and scope, it provides information of all income earned and expenses incurred for a specific accounting period, showing the sales revenue, okay, cost of sales or cost of goods sold, the gross profit, other income, including other gains and holding gains from investment in FVTPL or fair value through profit or loss, operating expenses, okay, selling, administrative, and other expenses, including interest and other losses, holding losses from investments in FVTPL and taxes, and net income or net loss for the current period. Okay, methods of presentation. Okay, so for profit or loss statement, it could either be presented uh, under capital maintenance approach or transactional or traditional approach. Under maintenance approach, a capital maintenance approach, there is income if the ending capital balance of an entity is greater than the capital balance beginning. Okay? Otherwise, it is a loss. Okay? If the ending capital balance is less than the beginning capital balance. Okay? So we're just going to adjust, okay, our capital balances, then compare it with the beginning and ending balances, okay, or amounts, okay, which, okay, will report income or loss depending if the ending capital balance is greater than or less than the beginning capital balance. Then transactional or traditional approach, okay, this is more common, rather it is most common, okay, because it is in conformity of generally accepted accounting principles. Okay, there is income if the reported revenue, okay, is greater than expenses. Otherwise, there is a loss, okay, if the revenue is less than expenses. Okay, so why in conformity with GAAP? Because we are presenting specific line item of revenue or income and expenses. Okay, so we've been mentioning about income and expenses. So let's define income and expenses. So for income, there is an income if there is an increase in economic benefits. Okay, that is a basic rule in accounting. An income is recognized as an increase to assets or decrease in liabilities that resulted to an increase in equity. Okay, other than contribution from owners. And income encompasses all revenues and gains. When we say revenues, we mean those items coming from regular activities, okay, or normal operations. Then gains, those from incidental activities. Okay, example of revenue is your sales revenue. An example of gain is your holding gains or the gains on sale. Okay, there is there should be a significant, okay, significant distinction with revenues and gains, okay, because revenues are normal operations such as uh, sales revenues, or if that is a servicing concerned entity, we have um, fees, okay. And for gains, we mean those other income, okay, not related to regular activities such as holding gains or holding gains from investments, and also we have the gains on sale of properties and other assets. Now we have expenses. Okay, there's an expense and there's a decrease in economic benefits. Okay, so good example for that is the recognition of your depreciation. Okay? So an expense is recognized as a decrease in asset or increase in liabilities that resulted to a decrease in equity, other than distribution to owners. It encompasses all expenses and losses. Okay? Expenses, okay, when we say expenses, generally we mean those coming from regular activities. Then other losses are from incidental activities. Okay? So each um, encompassing items, so mirror of the other. So revenues for expenses, then gains with other losses. Method of presentation, okay, the presentation of our profit or loss statement or statement of profit or loss depends on the presentation of our expenses. We have functional presentation and natural presentation. When we say functional presentation, profit or loss statement is presented, okay, by way that it shows the functional presentation of the expenses, okay, showing the cost of goods sold, distribution costs, okay, administrative expenses, other expenses, finance cost, and income tax expense, meaning based on the function. Okay, so all selling, okay, and promotion activities are under distribution cost. Other expenses that relates to the administrative functions, we have the administrative expenses, then other expenses or miscellaneous expenses. Those coming with dividends and interest, we have the finance cost, and related to government expenses, we have the income tax expense. And those related to general manufacturing or general operations, okay, we have the cost of goods sold. But under the natural presentation, we present the income statement that shows, okay, the nature of those items, okay, of expenses, showing the item of net purchases, sales commission, advertising expense, down to income tax expense. Generally, functional presentation and natural presentation both are similar with at least three items: the other expenses, finance cost, and income tax expense. Okay, so example, okay, of format for preparation of profit or loss statement showing function and nature of expenses, or functional presentation and natural presentation, we have it there. Okay, so I leave to you, okay, rather, I leave to you the, no, the judgment on how to appreciate the difference between the functional presentation and the natural presentation of profit or loss statement. Okay, either of the approach or the method of presentation, the net income of for the year should be the same. Okay, should be the same. Okay, so at least if we're going to compare functional presentation and natural presentation, we can at least compare it by uh, simple item, okay, the presence of the cost of goods sold account. Okay, computation of your cost of goods sold depends on the nature or the business concern. Okay, so for merchandising concerned entities, okay, so we use the merchandise inventory account. So merchandise inventory beginning plus the net purchases, there we have the computation, the net purchases. Then combine the two, we have the cost of goods available for sale. Then less the merchandise inventory ending, we can have the cost of goods sold already. Okay, so it's like a less complicated way of computing cost of goods sold. That is for merchandising. But for manufacturing, okay, we focus, okay, on the material items, okay, of inventories and other expenses that are applicable during the manufacturing process. Okay, but on your part, our focus mainly is on the merchandising portion. Okay, so for manufacturing, the raw materials beginning, add the raw materials purchased, then we can have the raw materials available for use, less the raw materials ending, we can have the total materials used. Add labor and manufacturing overhead, we can have the total manufacturing cost. Then add the work in process, inventories beginning, okay, or goods still in process, we can have the total cost of goods to be manufactured less the work in process ending. Then we can have the cost of goods manufactured, then add it with the finished goods beginning to arrive at the cost of goods available for sale, then less the finished goods ending, we can have the cost of good sold. Okay, so let's have an example for this one. uh, Preparation of your profit or loss statement. Okay, for the year ended December 31, 2019, okay, we are being required to prepare the nature and function of expense method. Okay, presentation of your profit or loss, okay, with supporting notes, assuming 30% tax rate. The 30% tax rate is referring to income tax. Okay, so we have from sales of 7,800,000 down to loss on expropriation of land of 90,000. Okay, so to prepare for your statement of profit or loss, okay, under the both natural and functional method, okay, for nature of expense, okay, so let me have a slight correction for this one. Mhm. Okay. Okay, for the function of expense approach, we have there the presence of your cost of goods sold. Okay. Um, wait, wait a minute. This should be 7,800,000. This should be 7,800,000. Okay. So slight corrections lang guys. Okay. Okay, down there. So we have profit for the year of 1,277,500. Then for the competition, wait, that's correct. It's 7,500,000. The competition of the net sales revenue pala. Okay. Okay, so we have net sales revenue, we have the gross profit 3,270,000. Then down there, okay, to profit for the year. So in contrast with the uh, nature of expense, you cannot see there the the cost of goods sold. Okay, but still it can be computed naman. Okay, so for the okay, the notes for each function method, that's it. So we have for the function of expense, we are actually computing for the cost of goods sold, okay, computing for total other operating income, total selling expenses, okay, total administrative expenses, total other operating expenses, and for the income tax expense. Okay, so for the presentation of the financial statement, you can see there, okay, the cost of goods sold, the presence of cost of goods sold. Then other operating income, selling expenses, and administrative expenses, and other operating expenses. It's really showing the function of expense. Okay, so for example, selling expenses, we can see in the notes, note 14, that we have freight out, sales commission, and store depreciation. Okay, selling expense. Then for the administrative expenses, okay, note 15, we have there the officer salaries, and depreciation of the office. Okay. So for the nature of expense approach, again, we don't have cost of goods sold here, but we can have here the computation of your net purchases, increase in inventory, we have here the freight out, and the sales commission, the computation of the depreciation, and the other operating expenses. So for the notes, okay, for purchases we have note 13. Okay, so net purchases down there. Okay, 5,200,000 plus 50,000 minus 140 minus 480. So we have 4,630,000. Then for the increase of your inventory, okay, we have the difference of the beginning inventory and the ending inventory. Okay, so 400,000. So for the depreciation, we have the total of the depreciation store and the depreciation office. Okay, so we have 440,000. And for the other operating expenses, we have the total of 305,000. Okay, so that's it. The difference of the function of expense and nature of expense approach.